Hello everyone, here is your daily crypto market update and analysis for Wednesday, May 20th, 2026. The market is showing some heavy structural shifts today as the ripple effects of institutional capital movements dominate price action. We are seeing a distinct change in how liquidity is moving through the system, leaving the market highly sensitive to derivatives leverage. Let's check the dashboard. The total crypto market capitalization is feeling the squeeze, drifting around $2.63 trillion. Bitcoin is fighting to establish a solid floor after hitting recent local lows, currently trading at around $76,560. The big talking point today is the massive reversal in spot demand. US spot Bitcoin ETFs just recorded a staggering $648.6 million in net outflows in a single day, marking the largest single-day withdrawal since January. This massive exit ended a solid 6-week inflow streak, concentrating heavy selling pressure on dominant funds like BlackRock's IBIT and ARK21 shares. Right now, Bitcoin is holding just above that $76,000 level, but the thin spot demand means derivatives and open interest are heavily controlling the short-term price direction. Ethereum is facing identical pressure, hovering right around $2,108. Capital continues to rotate steadily away from risk assets, causing Ethereum to extend its 2-week slide as investors favor a much more defensive allocation strategy. The Fear and Greed Index reflects this cautious tone, holding firm in fear territory at 28. Now, let's jump into 3 major stories breaking across the wires today. First, let's talk about that massive $649 million ETF exodus. Data highlights a critical shift in market structure for 2026. Weekly spot trading volume across the top 10 crypto assets is averaging roughly $80 billion, which is less than half of what we saw during the peak periods of last year. Because organic spot buying is so thin, when these massive ETF redemptions hit, the market becomes highly vulnerable to sudden leverage liquidations. This makes it a critical environment for traders to avoid over-leveraged positions, as the price can be whipped around aggressively by derivatives flows rather than steady buying pressure. Second, we are seeing an intense regulatory crackdown on the physical infrastructure side of retail crypto. The California Department of Financial Protection and Innovation has officially forced kiosk operator Hermes Bitcoin to shut down all operations in the state by today, May 20th. This follows a major settlement where the operator was penalized for charging hidden consumer fees and violating the state's digital financial assets law. This comes on the heels of major fines for other kiosk brands like Rocketcoin and CoinMe. It shows that regulators are aggressively cleaning up physical cash-to-crypto entry points, heavily restricting how casual retail investors interact with digital assets on the street. Third, over in corporate finance, Coinbase leadership is taking the stage this morning at the J.P. Morgan Global Technology Conference. Executives are presenting a massive push for what they call the Everything Exchange, highlighting their expansion into secure institutional custody, global settlement rails, and unified prediction markets. This active dialogue with Wall Street elite underscores a vital survival mechanism for the industry. Even when short-term ETF outflows look ugly on the charts, the underlying infrastructure is being deeply woven into the fabric of traditional global banking, building a strong long-term foundation despite the immediate price weakness. Looking ahead at the primary drivers for the rest of the day, keep your eyes on these 2 factors. Number 1 is the massive tech event happening later today. The entire macro market is braced for the Nvidia earnings report. Because crypto data networks and decentralized AI protocols track traditional tech sentiment so closely, a massive surprise from Nvidia could act as a proxy relief catalyst to flip the broader market mood from fear back to risk on. Number 2 is an expanding educational initiative in South America. Today, CoinEx Charity officially launched its Bitcoin in Universities partnership with Bitcoin Argentina. They are rolling out structured Web3 and blockchain tech resources directly into higher education systems to build local tech skills. Watch how these targeted global initiatives expand, as building localized, non-speculative developer talent in emerging markets provides a crucial, non-volatile fundamental anchor for the network's future growth. To wrap it all up, the near-term landscape requires a lot of discipline. The bull case requires Bitcoin to successfully absorb these heavy ETF redemptions, defend the $76,000 floor, and wait for macro tech sentiment to lift risk assets back towards $78,000. On the bear side, if thin spot volume persists and traditional tech takes a hit later today, a clean break below $76,000 could quickly expose the market to a swift retest of the deep psychological floor at $75,000. What sector or specific token do you want me to break down in tomorrow's update? Let me know in the comments, and I will see you next time.